Alrighty, y'all. We're on live, waiting for people to join. I don't know how to get this right for TikTok. I want to talk about, let's let some people get in the live, but I want to talk about what I realized today and perfect setups. Perfect setups that we just fucking... Perfect setups today. I took some losses to get faked out. Again, I keep doing it and I realize I have to go back to just trading reversals. That's it. ICT reversals. No more trading a bunch of like continuations, market structure shift, all this stuff. We're gonna trade simply reversals. Sorry, hold on. I'm looking at my phone. But yeah, we're going to stick to trading just reversals. Or if there's a continuation, we need a full break of structure to enter on a regular fair value gap. So on reversals, we invert the fair value gap. On continuations, it has to be a regular one. So let's talk about what happened today. So let's make the hourly big. So on the hourly, we had liquidity here because we were already kind of up here, right? We had internal liquidity here. And then we had a sell side, and then we had these three on the downside, right? I marked out an above, bearish fair value gap on the hour, and a bullish one on the bottom. So this is what happened today, y'all. I was negative 240. I ended the day up $30. So this is a trade I used to take. I started like trading reversals. And then I was like, oh, well, I can get done earlier if I just trade these. Like, if we know it's going to liquidity, which are the yellow lines, I either just trade it up to it or down to it. But I have to go back to what I know because this is why I would get faked out, right? It worked out today, so I did mark it. I did not take this trade. So these are the trades I took, these three. One, I got in early, broke my rule, did not wait for a candle close of this candle. This is why you wait for a candle close above the fair value gap. It did not. It wicked me out. Short stop loss because I knew I fucked up. I got out quick. Then we got this candle close below this fair value gap that was made. So we had this one made, and then we had this green one that was made, right? Which made another one. We kind of tapped into it and we wicked down, right? But I've noticed in the macros, it will do another internal liquidity sweep. So this, remember, on the hour chart is the yellow, the external. On the hour, we swept this liquidity. So that's a high time frame liquidity. And I said that on the hour, it might candle close below. It might do a lot. This is liquidity. So you're waiting for it to reverse from. Because on the 1 hour, it's going to look like a wick. It's going to look like a straight up, actually... Why did I do that? When I have it right here. See, it actually didn't like a wick. It actually came down a little bit and then it went reverse right back up. This was a wick, the opposite side, which is the target. I just didn't take it all the way up there because of my loss. Once I got back in the green, I took my win. So I noticed that I either need to just wait for reversals now. You see what I'm saying? If I just waited for my original reversal to the upside, this would have been the only trade I took. And I would have held it all the way. I sold right after this. No, I sold a little bit after this candle here. So I had a trailing stop. And when this candle went down a little bit, it tapped me out of the trailing stop, which I knew it was going to tap into this fair value gap. And then we had targets all the way up here. I also sold early because if it's going down lower, this was the breaker. We had a breaker. We were already up it. We were above 60%, 62% of the retracement if it wanted to keep going lower. So I sold in profit. If I didn't sell, if I didn't have any losses, and I was just up green for the day, I would have rode this to, these were equal highs, number one, right here. And then the next hourly one, it went straight to the next hourly one. And this is a real liquidity sweep. A little wick. And it reversed all the way back down. However, this now that we already swept the sell side, this yellow line is irrelevant. So you would have wanted this second trade to go down, take out this liquidity way down here. And it didn't. And that's why I said the macro trade is the trade of the day. It was the biggest trade. It went liquidity to liquidity. This one technically did not, but you still could have took this down. I saw this play out in real time too. Like the other day, what was it? Friday, I did the same thing. I took my trade up to get in profit like $100 because I had a loss. And then it reversed right after my take profit, for another like downward trade that it wouldn't have been as big as the original, the one right before, but that's still a big trade. You could have took this one too, which is a great trade. It looked like it kind of tapped back into this fair value gap right here actually to keep going higher. There's a gap like right there, so that would have been your take profit, not this yellow line, because now that we swept this yellow line with this trade, the liquidity is now down here. It's this one now. That's what if you were doing liquidity to liquidity. However, you would have just took this trade, and then you could have obviously let this play out all the way up to here too, because we got a big run. So you could let this trade play out, see if it's gonna go lower, and once we didn't go lower, you probably would have closed the trade right there. So now I'm trying to stick to just playing reversals, like trying to play every move. It worked for me for a little bit, but it really just ate my profitability. I was profitable, and when I was profitable, I was just trading this reversals. And if there's days we don't get reversals, I don't trade. So even this one, if it would have continued lower, for one, like Dodgy's DG says, all these liquidities it can take out, and you know your reversals is going to be bigger. It could come all the way down here, take it out, and then let me in, and it would have been a way bigger trade. So there's no reason to need to play these to the downside. Or since we see that we do get these little internal liquidity sweeps, and I even said that when I took this trade. When I took this trade, I said I'm not going to be confident we're going down until we get a candle close below this, and we didn't. You saw how we just wicked it. We wicked it 3 times, and then we reversed. So maybe for our continuation plays, like I marked out on the notes, we would wait for a full candle close below this first. Yes, your entry would be worse, but you would have like another swing high. You would have it would go down, candle close, it would come back up. You'd have a swing high to use as a stop loss, and then you would take it down. You don't need to get in at the inverse you need to wait. Because like I said, once you sweep liquidity on a higher time frame, it does this a lot. It'll do a bunch of this while it's trying to reverse. And when it does a bunch of this, when it's not a liquidity like this, it will run. And you see it ran. It barely rebalanced. It barely tapped into any of these fair value gaps. It tapped into like 1, 2, and 3, but it did not tap into any of these. It didn't even tap into this one that it made for the entry. It just ran up. Versus, this ran down too actually for a good liquidity sweep. But it made like a little head and shoulder thing going on, or double top, whatever y'all call it. So I'm trying to just do that. Like I wait for liquidity, wait for the reversal. If I don't get a reversal, we're not in the trade, and just being okay with that. And or we might get a worse entry, but we need to wait for a full candle close for a continuation. Not this. Like getting in just because we candle close below this IFVG is not good enough. We want to get a true break of structure, and then another fair value gap made to break, which we kind of did get right here. That's why I said the 1 minute will fake you out on we technically did get a liquidity sweep. A candle close. We got a swing low, and we got a higher low. We closed below it and made the fair value gap. So technically, and I did call that trade, like since I got in down here, I said if y'all want to get back in on this tap right here, and then you had a tighter stop loss, a smaller loss. But like I said, see how you get faked out? Even though you can get faked out on reversals, and it keeps continuing too, so it is what it is. But I think reversals are just easier to see. They're more beginner friendly. Even this one, look, reversal up. I love days like this. Reversal down, inverted this fair value gap. Boom. Reversal back up if you want to take it. Once we close above this red fair value gap, this red one here, you could take it back up to here. You see what I'm saying? We inverted this one. You could take it back down to here. You know what I'm saying? Like, yes, the moves are getting smaller, but these are still decent sized moves. Like, you could have traded. I honestly prefer days like this. Like, a lot of people like the days where it runs up or runs down the rest of the day. No, I love the liquidity to liquidity days like this. This would have been a day like everyone's like, don't overtrade. You could have took 1, 2, 3, 4, and honestly honestly, I mean, these are a little smaller, but even 5, you could take 4 to 5 trades today if you wanted to. Honestly, could have been 6 if you got on it before the macros and took this trade I called as well, down to the liquidity point, wherever it was. It was like somewhere down there. So today we're going to back test just catching the reversals, and if there's not a reversal, we're not going to get it. Because you know how I usually, when I'm on back testing, I'll be like, oh, this is the trade we could have took, a continuation or this or that. No, we're going to back test today, and we're going to go through, like, today we wouldn't have had a trade, and that's it, and move on. So just these ICT reversals and how good it works and how these hourly liquidity are just so amazing, and you don't even need them. I love the days too where, yes, you could have held it to this hourly liquidity, but there was one here, there was all these internal ones and they all, even the one I sold at gave me a 1 to 2. Like, all these gave you good risk to rewards. So I think my last one was this one. I was just feeling like it was going to reverse. Like, see how these are, like, they're getting smaller. Like, it didn't take out liquidity, it just like reversed. It's like going down, and then this one didn't take out that liquidity, but it reversed. Like, it went almost there. I thought it was going to do that. Like, I thought it was going to come up to like one of these pink lines and then reverse, which is still a good trade, like one of these in reverse. But it went all the way to the moon. So we'll see how tomorrow is. I'll be trading this in the morning. And this will look like on the hourly. We went down, and then we caught this candle, and that's all I've been trying to do is catch that long 10 a.m. candle. So let's go and back test. Let's go to the next New York session. I also just joined a dope Instagram trader conversation today. Someone added me to it. So if y'all want to be added to it, DM me after this live. Or you can DM me on Instagram. It's the same, Wealth Building Rockstar, and it's a bunch of just like black traders, guys and girls, mostly guys, honestly. And we're just talking about shit. It's only 9 of us in there right now, so it's kind of intimate, which is dope. We'll see how it gets when a bunch of us get in there. But if y'all want to be added to that conversation, let me know. Let's make this bigger because don't piss me off. I hate.
Don't mean that out.
Watching Love Island. Let's make this full screen because it won't play automatically when you make it full screen. So let's mark out liquidity because we're already almost up here. We have this fat ass gap that probably needs to be filled, and gaps always get filled. There's a guy on here, I think his name is Emmanuel Trades. He literally is like, gaps don't always get filled. He says he makes money trading, but anyone who says that to me, I'm like, well. But also sometimes gaps don't have to be filled that same day. So maybe that's what he means, but gaps always get filled. Always. Especially if you trade options. If there's a gap on your like SPY chart or whatever, usually after market open, it goes right down to it. And that's what I used to trade when I trade options. Okay. These are liquidity points. So at this point, we should just wait for the take buy side and then get in after that. So let's mark out our 950 to 1010, and we're just going to wait for a reversal. And if we do not get one, we don't trade that day. That's how I need to be trading. It's the easiest way to get funded. It's the easiest way to just trade. And then once you get some money, then you can try the other stuff. I was trying stuff too fast, and it worked for a little bit. Like, taking the trade up to this liquidity was a strategy I did for a little bit, and I was eating with it. And then this stopped happening, and then I was doing this for so long, I didn't go back to just trading reversals. Or I would usually trade up to this, and then if it were already closed or I lost, then I'd wait for the reversal. But now, I'm only going to wait for the reversal. Okay, we're going down. Do we have any internal just to mark out? I guess we have one here. Let's see. Okay. Now, we do have a lot of liquidity. We do have a fair value gap made here. It's very tiny. I don't really like it. I guess a swing high here. don't know if y'all hear all these dogs. Okay, good. Then we would just wait for the candle close above that. This is the trade, but yeah, these dogs, I live in Mexico now, and I don't know if someone has like a dog shelter, but the dogs are always fighting all day. Like they wake me up in the morning and they yell like this all day. Okay. So this is a trade we would have lost because I honestly feel like this fair value gap is not even a real gap, for real. Let me see. I mean, it kind of is. Yeah, it's a gap. It's tiny. This is one of those days where it just retraced and then came back down. So we just would have lost. Starting off the day, the back testing would have lost is not fun. Or, I mean, we're trading the reversal. So this is the day we either would have lost or we wouldn't have traded. And you see why I would get like so faked out on like, I need to trade every continuation or every this or every that. And it's like, you don't have to, but I be wanting to. Okay, where are we? I said next New York session. It keeps just taking me to the whole session, not letting it play. Oh no, that's just, oh no, yeah, it's 9:30. My bad on that last one. I just skipped the whole day. I forgot this is the 1 minute and this is the hour, so it didn't show it. Okay, we have liquidity there. We have liquidity here that we're close to. We do have a fair value gap on the hour, a bearish one that lines up with liquidity, and then the next one is way up here. So let's just see how that plays out in our 950 to 1010 range. Obviously, not every strategy is going to be 100%. Um, 1010. All right, liquidity right almost above this fair value gap, so it'd be nice to sweep it and go around or go all the way up to this one, or something to enter to go higher if we're confident in it, like a real continuation. Okay. What did we see on the 1 minute? We do have a fair value gap here that was inverted. But it made one right after. There's one here. And maybe we got into, there's also one right here. But let's see how it played out if we got in super early. And then let's take it. I mean, all these are good risk to rewards. So let's take it to this one and see how it goes. It looks good on the 1 hour, but again, you know, the 1 hour has to play out and close, so it could easily go higher on us. Just like that. Not fun. Oh, my stop loss was just too tight. It went our way. Stop loss was just too tight. Which I've always said, but like big moves like this, I always get just so scared, and I have my stop loss tight because that's a big stop loss. Underneath this to way up here, but I mean, technically, yes, the market can do whatever it wants until we break that swing high. Lesson learned, y'all. That's still a good 1 to 2 trade. So you gotta have the stop loss big, or you need to size down your contracts if you're scared. I just use the same amount of contracts every day. So that is the trade. That was it, the reversal in that time after the liquidity sweep. That's it. So now we're what, 1 and 1 on the day on this backtesting session. Sorry, I have not been paying attention to the chat. Kura, question mark, I don't know what that is. Ooh, I'm gonna message you. Yeah, message me about that group chat. Lost because predicting and not reacting. I am profitable trader and you trade with market money. Every trade is 50% lock in small profit. No, I always let the market play out first. I don't predict. I mark out. I mark out buy side and I mark out sell side, and I always react. I don't let the market. I don't predict it. It's swept liquidity. How I trade is it reverses from it, and it does a majority of the time. I don't predict. When I go in with the bias, I lose every time. And do you trade options? No, I used to. I started with options. And I always suggest people starting with options because you can use the smallest amount of money to trade with. That is the only thing you're going to trade with that will let you trade with small amounts of money. How does backtesting work exactly? Do you have to pay for the website? Yes, you do have to pay for this. It's $35 a month. It's not free. So do with that what you will. But if you want to learn, you should get it. Okay, marking out our liquidity points like I do. I don't predict the markets. I don't go in with the bias. Like I was telling Johnny that even though he's a good profitable trader, I'm like, fuck a bias. Mark out your sell side and buy side. Wait for it to take one and then take it to the other side. That's what I did today. I don't go in like, oh, it's going to take the top one first. Oh, it's going to take the buy one. Now, some days it's clear. Some days it's very fucking clear. But even if it's clear, it still can go and do stuff your way. Glad you said that. I've been trading options just started trading futures and studying futures. Yeah, a lot of people trade futures. Okay, the only thing about futures that's better, one, the tax. Futures, you're taxed 60-40. Like, so 60% is taxed on normal, like, capital gains and 40 is taxed on something else. So that's the number one thing about futures people like. And then futures, the charts just look better. So let me show you. I can't on FX replay, but I can do it on here. Let me show you what like QQQ looks like. And then this is, they might look the same though. Let's see. I literally said the hourly and, oh, this is the hourly, okay. Okay, on the hourly, they do look the same, even though the candle is different. But let's see on the 1 minute. Let's cut off my fair value gap for a second. But yeah, are you profitable with your back testing yet? Yeah, so far I am 2 for 2 since Friday, since trading just the macros. Okay, so with QQQ in any stock, obviously overnight it's gonna look like this because they only do market open versus futures. You know, it trades 24/7 during the weekday. Let's see. So there's like gaps like this that we don't have in the futures chart. Obviously, this could be a fair value gap. Sometimes the swing high and swing lows are just not as clear. Like, I feel like the swing highs and swing lows are very clear on futures charts. The fair value gaps on futures charts are cleaner, but for pretty much it looks the same. Obviously, your stock market open is going to look very different because futures is trading, and then on a stock, it's not open until 9:30. So it does pretty much look the same, but I just feel like the price action for me is cleaner on futures charts. Most people do trade options still and watch futures charts, but actually this is not bad. When I was looking at SPY compared to ES, it was pretty rough. The only this little gap right here, but other than that, it looks really good. But I don't like blocky swing highs like this. I don't. I like clear swing highs. I know when I was looking at like SPX on Oanda, it was the swing highs and swing lows were nasty work. I trade with Top Step. Can we do day trading ETF? What do you mean? Like a fund, or you mean like Ethereum? I'm blanking. How does backtesting work? Do you have to pay for that? I read that one. Glad you said that when trading futures. Are you profitable with your backtesting yet? Yeah. Like I said, the last 2 days I've won, but I keep taking losses and then cutting down my profits. So that's why I just said I'm going back to just trading reversals. And if there's not a reversal that day, that's what I'm doing. 'Cause I keep getting faked out on the 1 minute. and make my profits really small. Can we do day trading ETF? Are you with the firm? Yes, I'm with Top Step. I'm just trying to wrap my mind around the value being so much higher. What's your experience with them? I have not really had peace since I started trading prop firms because the rules will really fuck up your psychology. However, it's good, it makes you a good trader, but with options, you don't really have to think about that kind of stuff. I mean, you kind of do, but with options, you can buy a $5 contract. You can buy a $10 contract. And then that's your risk management. Like, you don't really have to do risk management. But with prop firms, you're like scared because if you lose 6%, your account's blown. Versus like with options or your live account, you lose 6%, you have 94% to still trade with. You know what I'm saying? So I feel like my emotions, it really set me back with prop firms. But now I copy trade them with my live account. And I just want to get funded because I feel like too, I'm trying to be a content creator and build an audience and have a Discord and all the things. And I feel like we're in a there goes my mother. Sorry, Mom. And sorry, Love Island. With trading, what was I talking about? With prop firms, I copy trade with my own money, and I feel like people don't take you seriously until you have funded trader in your bio, basically, these days, even though it really doesn't matter. Because most people I know, and I was very anti-prop firm for a long time. I really was. Because I just feel like they're fake, and I was right about the Forex ones. Everyone says the futures ones are better, but the futures ones, also the rules are so shitty. Like with Forex ones, if they were legit, or the ones that are still legit, if you can get a 200K account and you can just start making like hella money, like 10, 30, 40K a month easily. Because they give you a lot of drawdown. They give you like 10% drawdown, you can make 10%. Like I was making like 4,000, 5,000 a day on my Forex prop firm account. And then I was on the funded trader and they like closed up shop for like a month. And I was like, I'm not playing games with y'all. Because if I spend months to get funded and then y'all close down again, I'm going to be pissed. Versus futures, it's like you have to make like consistency rule, and you can only lose 6%, so you can't really over leverage. And then if you don't over leverage, you're only making like 200, 300 a day. So like even when you get funded, you'll make like 3 to 4 grand a month, which is like cool, but like that's not like life changing money. Versus like with a Forex platform, you can get funded and start making like life changing money. But so far I like them, and they're really cheap. Do you think it's better to get the education with the prop firm or study further before joining your firm? I do, because I feel like you're gonna waste your money if you don't. Especially futures prop firms, also they charge you monthly. They don't charge you like one-time fee like Forex one. So if you get a broker, like with options, you can paper trade with your broker. Ninja Trader, I can paper trade with my broker. And then with futures prop firms, they do let you paper trade, but I don't think you need to pay for that. But I don't know if all brokers have a paper trading option. I don't remember if Tradeovate had a paper trading option. I did have Tradeovate for a little bit, but Ninja Trader does. I can like just paper trade with it, and then I can just practice. Boom, we got our reversal. We can wait for a market structure shift here if you want to be extra confident. Or we actually do have to wait for that because there's no gap here. It looks like a tiny one, but it's not. You see how they're both touching the bottom and the top? We do have a value gap right here for regular ICT people. Actually, I'll mark out both. So, and then if you want to wait for the 50% of it, or like in between this one, you can wait for it to tap in here before you enter. But we didn't really get a market structure shift yet on the 1 minute until we break this high. But some people do enter on these fair value gaps because of displacement and a liquidity sweep. So let's see how this plays out. Tapped into the fair value gap. We don't have another one to inverse, but see, we didn't market structure shift, so, and it would have stopped you out, or maybe not. Maybe it almost did by a tick, but not quite. Okay, it didn't quite stop you out, but I'm still not confident in getting in this trade yet. But I am looking for the reversal. We do have some wicks, and we had a wick on this other candle, but I'm still waiting for it to. Now that we've made more swing lows and highs, though, it can just break like one of these to the upside. And if not, like I said, for a break of structure to the downside, like I said, we need a candle close, full candle close, before I get anything to the downside. Okay, Now we have a market structure shift, and we do now have a fair value gap that got inverted. It's after our macro time, but not by much. So it is a big stop loss, which you know I fucking hate. And it's technically the candle close after that is still way up there. You can even wait for another swing high to be made. Maybe like it comes down into this fair value gap. Maybe that's what you want first. Like enter off of this fair value gap, tap to go higher. But so if it doesn't tap you in, you're not in the trade. Yeah, see, that's why also I don't wait for fair value gap taps anymore, because sometimes it won't even tap you in. I mean, this is the inverse, so technically that's not the one you want to get tapped, even though some people do wait for taps of the inverted fair value gap, but technically the only tap you need is on the one that was made on the way back up. So we made a fair value gap here, it tapped into it, so your entry would have maybe waited for that. It's a little bit better than that candle close. I mean, it's actually the same as that candle close. I usually just get it on the candle close for this reason, because lately it will not come back and tap you in. And yeah, you'll get a better entry if you wait for the fair value gap, but I'd rather not miss out on a move just waiting for a tap, which is a beautiful trade. Even though your stop loss is fat, it did run up a lot. I would have just took it to here for 1 to 2.5 and it hit it beautifully. So you really wait. It will do a lot of choppiness. And this, I do get faked out on these. I'm trying not to. I'm trying to just catch this move like we just did. Like wait for some real for sure, like market structure shift up higher if you're not. Top step is pretty solid, I've heard. And top step is super cheap. I mean, Apex is cheap too. I've heard stuff about Apex right now, not paying out people. So I don't know. That's why I copy trade. I use a trade copier. I use Replicanto. And I trade my live account, and then if I'm trading really badly, I'll only trade the funded, obviously, to not lose more money of my own money. And then when I'm trading good again, I'll go back to copy trading. And then once I get funded, I'm just going to go down to copy trading the smallest lot size. I like that everything is calculated beforehand with futures. I agree. And also with options, I mean, options are still the same because I would trade SPY and QQQ, but like I feel like with options, since they're stocks, I just feel like news and shit was making them move or more volatile. Like Elon Musk sends the wrong tweet and fucking SPY hop skipping around, or you know, and I don't like that. Which I feel like futures moves at the beat of its own drum. So I was told about Apex declining payouts. Exactly, Apex does get you funded fast, and they're like they allow you like 20 accounts, and they go up to like 300K. So there is a guy on TikTok, and he started Arctic funding, which does prop firms for options. It's the first one. I don't know. And the guy in the group chat on Instagram I'm in, he said that he trades with prop firms with stocks, which I didn't know was a thing either. So they might be out there. I have not seen them, but I usually just trade my own money with options, and then with futures, you need way more money though. Like I put 2K in there and I'm down $900. So I was like, let me just go back to prop firm for a little bit. But also, I was down 500, made all my money back. The fucking internet bank glitch, my broker froze on me, and it was bad, and I closed my trade even though, because it wasn't working. And then it went my way, but I just didn't want to. I didn't have a stop loss set, because I don't really trade with a stop loss anymore, because of sometimes lately it's been really big. It's been really big stop losses, like spreads, like you know, like the way the swing lows and swing highs are made. You have to get in like way down here, and your stop loss is way up here. So I don't really trade with the stop loss. And then when the power went out, when that glitch happened everywhere and all the planes, airports and stuff lost power, I just got on my phone and closed the trade. And then the day after that, I traded poorly for just off the emotions from the day before, and then I just got down again. And I was like, you know what? Let me just take a break from my live money. Because I'm saying live money emotions is very different. Like now that I'm full porting my fundeds, and now that I trade NQ, because NQ has so much movement, dude. that like I'm already risking $50 a day just trading NQ in my live account. If I went back to ES, I can probably risk like $20 to $30 a day. You know what I'm saying? So with NQ, it's like I might as well full port my Top Step account because it's $50 a month. So if I full port every day and lose an account, that's just as much I'd be risking with my own money. You see what I'm saying? I don't do that, but if you did, it's like the same. So you might as well just try a Top Step account, a 50K one, because it's the same price you're gonna risk with your own money if you're coming over to futures. What's the strategy? The strategy is market structure shift in the macro, ICT macro, 950 to 1010 after a liquidity sweep, an external liquidity sweep from the hour. Let's mark out this low too, even though this is the candle we're currently in, so I don't like marking that. But let's see if there's a swing low. I mean, it's still already made, so let's just do it. I was told is the same as QQQ. Yeah, NQ is the same as QQQ, and SPY is the same as ES. Liquidity sweep, but we're not in our macros yet. And boom, we swept it. So now we're waiting for a reversal. Okay, we have a swing high. So let's see if we break this swing high. We're going up to the upside. We don't even have a fair value gap really till way up here to be inverted, which is not nice to us. But it could make more on the way down. Okay, yeah, we did make another one now. Right here. Did not candle close above it. So this wick, this is how I be getting faked out sometimes, getting trigger happy. Did not close above it, and it might just keep going down the rest of the day, and this is the day we don't trade. Like I said, we do have another one here if we want to reverse. But I'm trying, like I said, only play reversals because then you don't just lose money. And then you can risk more. You can risk a lot more in your trades. Okay, we got a reversal. We did get a fair value gap and retap down here. So let's let that play out. We do have a swing low made, which is not way down here, which I love. I love when they mix another swing low. That can be your stop loss versus like when it's just straight up from here. That has to be your stop loss. That is a little tight, but we can go down. You can also do like this, and then once it goes up 50%, you can move it up. I've done that before. You know what I'm saying? Let's see if we get a reversal to at least, honestly, that fair value gap that we had marked earlier. And it could go above it too. Let's just see if it feels as the 1 to 2.4, which is a pretty good risk to reward. Let's see, it could keep going lower. It stopped us out. Yeah, so I'm glad we did have the tight stop loss. And this is the day we either just wouldn't have traded or we just would have took a loss. It is what it is. Cause even, I mean, we did get a good big break of structure here. But we did get this big wick, but it came up and tapped, came down. But yeah, we did get it inverted here. It's just one of those days where, and I feel like sometimes these trades like this, what is signaling the reversal? Do you look at your higher time frame imbalances? Yeah, sometimes. There isn't, let's see on the 15. So for a reversal, you wait for a liquidity sweep, a higher time frame liquidity point like this. Let me make this bigger. You wait for a higher time frame point liquidity, like before we got on the chart, it was this one. So this is a perfect liquidity sweep right here. You know, this up here. And then you wait for an inverted fair value gap, because I feel like those hold better than regular ones. So once you make a fair value gap, so technically regular, since we're continuing the trend, it respected all these fair value gaps for the most part. But you want to see if it's a red fair value gap, you want it to close above. If it's a green fair value gap, you want it to close below. You see what I'm saying? That's what marks our reversal. Or when swing highs and swing lows are being made, you want like higher, start to see higher highs. So we have this one. I mean, technically these are all lower lows, so I should have paid attention to that as well. We're still going down, so that wasn't a good trade. So you gotta pay attention to that. But you're gonna start seeing higher highs being made. And as soon as a higher high is made with a candle close above, that's when you get in the trade. So we didn't even get any candle closes above. We're still making lower highs and lower lows. So that was just a bad trade in general. Now, if you had a higher time frame bias to keep going lower to this one, then you could have played it. Or I'm trying to get into, do get a candle close above this one though. Tight stop loss. But see, our stop loss was tight on this one, so I wouldn't mind getting in that trade, because when we got candle close above here, tight stop loss, right, to take it to here. Once we got that break of structure, if that's my first trade, I'm getting back in. Candle close below this, taking it down to the next point of liquidity, which is, I mean, it is a little far, but it's looking strong on the hourly. Because like I said, I'll take 2 trades. If I lose the first one, I'll get in the second one. I mean, I did take 3 today, because one was a fake out that I got out of really early. Come on, was there another liquidity point on the 5-minute that wants to not hit? We're still down there. There we go. Nope, not quite. When it does this sometimes too, like I said, if it's going down and it's not seeming like it's going down to your take profit, once we just break a previous low we just made, I'll sell right there. You know, like, or like if it's, once it breaks this one, I'll sell. Like once it's doing this, I don't stand trades long either. That's my thing. Are you familiar with ICT 2022 model? Yes, that's what got me to trading. It seems pretty similar. I was wondering if that's what you were playing off of. Almost, but not really, but yes. It's exactly that, but instead of a regular fair value gap, I'm doing an inverted fair value gap. Same thing. Waiting for liquidity sweep, market structure shift, all that. So this is one of those times where it just continued down, and then waiting for a real strong candle close break of structure. Because even this right here, all this in here is kind of choppy for a continuation or going up, even though we are making lower lows. So maybe add that confluence, inverted fair value gap and a higher high made, even though this technically is a swing high right here. And this is why sometimes you want to maybe go back and forth between the 5-minute, because the 5-minute, see, won't really fake you out like that. Like on the 5-minute, it's just, there's no signs of an entry here. There's no gap. There's nothing. It's just, you know, and then you would have gotten in at the change of state of delivery, which would have been, yeah, when we closed below this candle on the 5-minute. So it is what it is. Nobody was saying I told it I showed it a few months ago. Facts. I did not fuck with them either, but I did feel like I definitely learned from him. And when he first introduced him, I was like, what is that? ICT does talk about them though, and Elliott Trades talked about, a lot of people talked about him, but not as big as him. And even TJR took Dodgy DD's full strategy. He trades liquidity sweep, inverted fair value gaps as well. I just feel like they do hold higher and they hold better, in my opinion. Especially on the 1-minute. Now, on the 5-minute, you could trade a regular fair value gap, you know, other higher time frames. On the 1-minute, I do think it holds a little better and a little stronger, in my opinion. And it like almost swept this. It didn't even sweep it. Maybe it's gonna keep going. Maybe it's gonna rebalance a little bit. But let's go to the next New York session. So yeah, it did sweep it in like at 1 p.m. the afternoon. So like another hour on the chart. I got out too early. Patience is something I do have to work on bad. It's really bad. We did fill this gap. Next liquidity point is here. I used to, honestly, when I wasn't patient, I would just put on TV shows while I trade. I'm gonna have to go back to that. I used to put on a show like a stupid ass show like Gossip Girl or Love Island, something that you don't really watch for real, and then it helps me like look at something while a trade is playing out. Like once I'm in the trade, like I don't watch the show while I'm looking for a trade, but once I'm in a trade, I set my TP. That's that, and then I'll put on the show, and then I'll look occasionally, and then it'll just either hit my take profit or it won't. And then, but now sometimes I do trailing stops, and now I do use stop losses sometimes I don't because of S&P divergence. If I'm not watching ES, it could sweep higher on NQ and then go lower because there's S&T on ES. So I don't really trade a stop loss sometimes. It has to like really push above a swing high for me to close out, which is a little dangerous, but YOLO, live life on the edge. Alrighty, we're still not in our time frame. It's a good move though. If you want to catch that at what? 9:30? Yeah, it's a perfect 9:30. Came down, wicked, and went up. I used to trade this, and sometimes it will do this and it will go right back down on you. But when it doesn't, the 9:30 candle will usually tell you a lot. Swept this little internal liquidity and ran up. But you know we're waiting for a higher time frame. Damn, it reversed before we even gave us a chance. Yeah, I don't know what today would bring us. Okay, we bounce back in. Let's see. Maybe we wait for it to close below this before we get in. There is a liquidity point here too, but or we wait for it to break the swing high to go up higher. We do get a little inverted for value gap here, but I'm not too strong on the direction. You could even wait for a candle close below this to get in, but I'm not really strong, again, like I said, on the direction right now. All right, I mean, it is like it's pushing off of that. And then we do have another green one here. So I guess you could have got in on one of these under here. Nope. See why? I can tell. You can tell when things just aren't sure. When they're clear, they're clear. Now I said if we want a continuation play, we want a break of structure, a full strong one, at least a gap. Did not get one. Okay, so at this point, you should wait for a candle close below this big red gap on the hourly. But technically, see, liquidity, that's why I was talking about when it wicks like this, it can easily wick like this and then come back and do a real liquidity sweep. That's why I like it when it's just chopping up here for a bit better. Like this, but longer, when it comes up and chops and then goes down, it's just a better, because it did its business up here. We still don't get fair value gap, but we do get a regular ICT 2022 mentorship breaker. Tap into the breaker. Breaker left a fair value gap, which is the what? Unicorn setup, if you know what that is, which is a lot of the setups that people swear by. So you could have got in right at the fair value gap. I used to trade like this in the 1 minute. I would have my entry just limit order at the fair value gap. You can take it down to these orange line for almost a 1 to 4. It already swept it. So that's a good trade. It would have been hard to see. You would have been, after this, you would have been kind of scared to take this, I feel like, unless you're like a not noob trader. Or let's see if we can get in. Candle close, and then if it goes lower, see if we can get like a candle close and then a retap. Okay. No. Just reversed again. That's what we're talking about. And that's why I like to trade liquidity to liquidity, because anything after that is none of my business. A good 1 to 4 trade right here. A good 1 to 4 trade right here. Anything after that is none of my business. You can hope it goes down here. It could easily pull back, rebalance until it makes a higher high. We're still in a downtrend. It can come up to here and then go down, but I'm already in a trade. You could play this reversal to one of these liquidity points. Let's see how that plays out. Yeah, so you could have got in on like the green one that was made after the fact. When that one reversed, you could have got in. But honestly, you would have got in on the candle close, it would have stopped your ass out. So you either would have waited for a regular 2022 mentorship where you got, so maybe let's backtest that confluence tomorrow. Let's wait for liquidity sweep, market structure shift, retap into a fair value gap. Boom, we got it. I usually get in here before, at the market structure shift in case it doesn't want to come back. Like here, and then just take it to the next point liquidity, and you can go a little higher because it swept it. Like this now is irrelevant because we already swept it. Kind of like what happened today where we just trade liquidity to liquidity. These are my favorite days to trade. So we had that trade, and then we had both regular ICT 2022 mentorships / unicorn setups. Tapped right back into the breaker. So tomorrow I think we'll backtest that. We'll still do during the macro session though, or after the macro session. So this one was right after at 10:30, which is like silver bullet hour. That's why I like the macros, because it could be a little earlier. It could be 9:50, 9:45. I'll get in, or it could be a little after, which is silver bullet hour. And then these are your trades. The model's finished, like you said. It's none of your business after the liquidity has been taken. Exactly, like nothing. I mean, you can do this, trade side to side, but like I said, once I get my win, especially now that I'm kind of like full porting my funded accounts, like I'm sure I'll be at my max daily gain for consistency rule on one of these trades, and probably not even before the trade plays out. It'll be like here. So yeah, I think that's good enough for today. So yeah, tomorrow we'll go back to the ICT 2022 mentorship. I mean, actually, hold on. Technically, we didn't even invert this fair value gap. It's way up here. Yeah. So you wouldn't have got stopped out. You would have gone in at the same time as this one, because it didn't candle close above it. It just wicked above it. So you wouldn't even have gotten in until here anyway. So that actually did work out, the inverted fair value gap. But maybe you can wait and get in on the market structure shift. So you can do two confluences, an inverted fair value gap and then a market structure shift for extra. So say this candle did close above the inverted fair value gap, you wouldn't enter until a swing high was broken as well. That could be the thing. Or, regular unicorn ICT 2022 mentorship. And that's it. And then once you hit your money, you step off and you go on about your day, and you just gotta be patient, because see, this didn't give us anything. This didn't give us anything. Or you could have got in here, but you would have got stopped out. And this is probably S&P divergence, honestly. That's usually how it looks. Like on one, it makes a higher high and then reverses, and on ES, it makes a lower low and reverses. So let's see. Let's see if that was the case before we get off for the night. Where are we looking at here? Let's do 950. Exactly, see? Lower lows on ES. And I need to be better at watching both. I was watching both, and then I stopped watching both. Because the S&T, it happens, but it okay, so yeah, this was the choppiness, right? And then look, we got a lower low, and that's exactly why I don't really trade with a stop loss, because liquidity was never swept on ES, so that was a good sign of us going down. And see how ES, and this is why I stopped trading ES, because you see how we got a good trade here, but on ES, after that, it's just choppy, and it goes down a little bit. Like, it barely goes down enough for you to get a real gain from it, you know what I'm saying? Even though it's swept liquidity. And then it ran up, and it didn't even give you an entry. I mean, it kind of gave you an entry to go higher and take the buy trade, but it's just not as sexy as both of these NQ trades. So that's why I stopped, but it's good to watch it for S&T. So if you would have gotten on this trade, I mean, that would have been a fat ass stop loss. So you need to make sure your drawdown on your funded account, because like say your max is $1,000 a day, but you're full porting for it to go like $1,000 this way. But if it gets to $1,000 like up here before stopping you out, it's gonna liquidate you and you can't even get in the trade. So you have to be like weary of that if you do something where you get in down here. But that's what like S&T is. So it's like I'm trying to watch both. I just don't like to, but I guess I could. I guess I could go back to watching ES, not 2024, and then marking the hour liquidity point. So you can just zoom in, which most people do. I just don't like flipping back and forth on my charts, honestly. I don't. It really irks me. But you have to do it. That's what you have to do. So I would probably mark out like my hour liquidity like I did on the hourly chart. And then I would go back on the 1 minute once one is swept. And then I would have ES on the 1 minute as well. And then I would just look at S&T. Let's see if there's any S&T. Yeah, S&T is one of the best confluences for sure. Like you can honestly do hella turtle soups just off S&T. Do we have any S&T today? We did not. It matched beautifully today, the charts. So there was no S&T today. But if there was like that, it's a very sure sign we're going down. And then you can just play it on NQ because the moves aren't as good on ES. But then ES is the one that like you can risk so much less, like kind of like options. You can trade with less money. So it's like, it sucks, but it is what it is. But yeah, I think tomorrow we're gonna keep doing this and we're just gonna see. We'll probably just look instead of like mark the trades of what works better. The inverted fair value gaps are the regular ICT 2022 mentorship, or we'll just do inverted with the market structure shift. Because we got one here, beautiful, or you could have waited for, this one, candle close below that low. You could have waited for that as well. Not as good of a risk to reward, but then you could have had your stop loss above that high though that was just made. So another decent risk to reward. It's not as big of a gain. And then obviously this one, it worked out in all the ways. Unicorn, inverse, and regular ICT market structure shift. It worked out beautifully on that. There wasn't a little S&T open after open today. Oh, true. Now that I don't trade the open anymore, I get on at 9:45 now just to only focus on my macros. Where was it though? Oh, was it this one? Because this made a... No, it looks the same. Where was the S&T at? 9:30. And maybe if I zoom in, I feel like these were the equal highs that everyone was targeting today. Today you could have traded ES though. ES on this chart versus whatever fucking day this was, September 2023, you could have traded ES and made the same amount of money. This is a good run up, a good move. Not the same amount of money, obviously, because there's more ticks in these moves than these moves, but you could have had a good, 1 to 5. A good 1 to whatever. Then you would have, that would have been a good move. Yeah, 1 to 4, or take it way up here. So ES, and then same thing, going down, going back up. Yeah, ES was pretty good today for trading, but sometimes it's like this, and that's why I switch. Where like NQ is moving, and ES is like, nah, I don't want to move. I'll give you the timestamp. Give me the timestamp. But yeah, S&T is really, you can just trade honestly this. You see a lower low on one and a high a liquidity sweep on the other. You could just be like, a non-liquidity sweep. Technically that's this one. These are the same. This one swept this one, which is this trade that swept this one. It didn't move at all. It just moved sideways. Timestamp. Well, I'm about to get off live, so let me know the timestamp. And I guess we can do one more since we're waiting for that timestamp. Let's go to New York. Next New York session. Let's try marking on the 1 hour on NQ and having ES on the side like that. 6:15 p.m. to 9. So you mean overnight it was S&T? Like Asian in London, you're saying? That's not market open though. You put 6:15 p.m. to 9:45 a.m. Look at the 1 minute IPG. Yeah, the one down here that was made for my entry, it looks exactly the same. It was created at the open. Okay, so in here, looks the same to me as well. I don't know what you're seeing. I'm trying to zoom out. Yeah, it looks the same today. There's no S&T today. I mean, I feel like someone marked it. Dodgy's, he paper traded, but he said he marked one like down here. So maybe it's like an hour early or something. He marked it for like it to go up. Let me see. Like I said, I just started trading S&T. I feel like without a stop loss, I don't really need it. But he marked it. Yeah, it still swept it on both. I don't know what he marked. I don't know what that man marked, but they look the same. Both lows taken out. Oh no, it's not taken out. This was S&T. So ES took out this liquidity, and NQ did not. If it was, you keep the line straight, it did not. So yes, that's a sure sign. You could have just traded this candle just from that right there. I don't know what I'm talking about, but yeah, okay, yeah, that was the S&T. So that's what it was. Even though, what was my? I have marked a liquidity point on the 1 minute for NQ. That was my liquidity sweep. Yeah, I marked. Which I think I marked this one. Yeah, that was my liquidity sweep. Actually, no, I marked the higher one. That's the one I counted for my liquidity sweep. And it traded below it a little bit. And that was my entry. And then obviously on ES. So yeah. Gotta keep that ES chart up there. I do. I really do. I will tomorrow when I live trade at 9:45. If y'all join me, I'm gonna keep ES on the side like this. And we'll see if we get. But see how like you can trade it without it, but obviously maybe I wouldn't have took any of my loss. I wouldn't have taken that loss to the downside actually if I had the S&T in mind actually. So I would have had a nice like $500 day instead of a $30 day. But you know, it is what it is. You gotta keep doing the stuff, and it's just like if you want to be a good trader, you gotta do it. And I just be tapping out like, damn, S&T, I gotta do it, but you gotta do it, y'all. So let's see what the market gives us tomorrow. We'll sit here. We'll leave the 1 hour up for me in the morning. You know, ES on the right, NQ on the left. And yeah, see you at 9:45 in the morning. Thank you for that, Tay. The S&T, I was like, I'm not seeing it. It was tiny, but it was there. It was there. But yeah, I'll see y'all later. And then tomorrow we'll back test this strategy again with maybe ICT 2022 mentorship model / unicorn model for the entries and see if it's better than the IPGs, which is how most people trade this. I love you like I never ever left your bed.